Hi, Brent Verkus here with Market Timing Academy, and in this section we are going to go over some examples of stocks that met our selection criteria for our investment strategy and show you the exact buy point within their charts that they made their major move. The purpose of this is to highlight to you that our strategy is based off of fact. It is not based off of opinion. So each of these examples will be companies that you probably recognize, and at the point that they made their major move, they met each and every one of our fundamental selection criteria, and then I'm going to show you the precise buy point on the chart that we would have entered that trade. Now, in the upcoming chapters after this, we're going to go over each and every one of these examples in much greater detail so that you understand exactly what we are referring to when we look at technicals within the chart, when we say cup with handle, or we say basing pattern, or we say channels. But in this section, I just want you to see what these stocks look like just before they made their major moves to the upside, because this is exactly what our investment strategy is based off of. Fact, not personal opinion. So let's dig in here. Okay, how about we take a look at Walmart stores, a company that we're all familiar with. They were one of the first people to put discount stores in small towns where they found there was no competition. That was their niche. Now, this stock we're going to take a look at from March 1979 through September 1983. Now, you can see the stock was in a nice little uptrend here back in 79. Okay, and then it entered a perfect cup with handle basing pattern right through here. Okay, and when this stock broke out from the cup with handle pattern right through here, okay, the company had earnings per share accelerating up 48% from the prior quarter of up 29%. Annual earnings per share growth was up 36%, sales were up 36%, and most importantly, return on equity was up 26%. So you hit a perfect buy point right here, and again with good solid volume on the buy side, okay, which resulted in a nice uptrend, a very nice uptrend, obviously. Okay, and the one thing that I want you to note here is you had the ability to add to the position right here because the stock pulled back to its 10-week moving average. Okay, and then the stock went into another flat basing pattern right through here. And during this period of time, we saw earnings accelerate significantly on the stock, and then we found another breakout point right here for a confirmed buy point on good solid volume, and then we had another small little basing pattern right here with another confirmed buy point right through here. And these are all things that you'll learn about as you go through the ebook, and those resulted in a very good move to the upside. Again, if you go right through here, okay, and then you had another what we call cup with handle pattern right through here, which converted or resulted in another ideal buy point. So you can see here, you really got lucky if you found Walmart back in this area in June of 1980. But again, the stock experienced a tremendous move to the upside. Okay, again, following through with the upside here, going into another basing pattern, as you can see. But Walmart was up 967% in just 163 weeks. Now, the most important thing that I want you to note about this is we're only through September of 1983. Now, Walmart has kept reinventing itself over the years, which is very difficult to do in retail, as you know. But check this out. Walmart ultimately went up another 4,712% for a total of 51,240% from the initial buy point right here. What a spectacular move, and a great example of a stock that you can catch right when it's redefining the way retail works, and you had multiple buy points just over this period of time. Again, can you imagine what happened over the next 20 years? So a great example. All right, let's take a look at a company that I know quite a bit about. It's a company called Charles Schwab. They are a discount brokerage firm, and we're going to look at them from the period of February 1994 through June of 1999. Now, this period of time right through here is when I was building my business as a stockbroker at Merrill Lynch, and Charles Schwab made my life miserable. Okay, they were the company that was pioneering discount brokerage firm commissions to the individual investor. Now, during this period of time, the stock market was doing reasonably well, and so as a result, the value that brokers were providing wasn't that significant. As a matter of fact, a lot more investors were using a lot more of the tools and resources that were available to them because of the internet to start trading their own stocks, and Charles Schwab was one of the pioneers of that industry. So what happened here was, back in December of 1998, the company started a nice basing pattern and had a resulting perfect buy point on the breakout right through here, okay, on good volume. And I remember this significantly because the stock increased 439% in just 26 weeks during this period of time right through here. And I was so fed up of listening to my clients about why my commission is so high and they could just do the same trade at Charles Schwab that I actually bought this stock for all of my clients here. And I think that they officially thought that I had lost my mind. But the fact of the matter is again, in the stock market, you can't let your ego get in the way. And me as a broker for Merrill Lynch, I questioned the value that I was providing clients for the commission that I was charging. I would have rather been paid on performance. And Charles Schwab, over that period of time, recognized this and pioneered a new industry. And since then, the tools and resources that the individual investor have are just absolutely unbelievable. And I believe you can thank Charles Schwab for really reinventing the brokerage business. So Charles Schwab, 439% in just 26 weeks. Great story there. All right, let's take a look at Apple Computer, which over the period of August 2002 through April of 2006 increased an astounding 1,534% in just 99 weeks. Now, if you go back to 2002, the stock was really just trading flat, really not getting anywhere over the course of about a year. And then you'll notice right here in May of 2003, you had a major jump in the stock on major volume, which again is very important to the way that we analyze stocks. And so that triggered a nice little uptrend right through here, okay, which we start to look now for buy points. And then you found the stock enter a perfect cup with handle pattern right through here. And that particular cup with handle, to give you a little background on it, was 20 weeks in length. 6 weeks were on the left side, 4 weeks were in the middle, 3 weeks were on the right side here, and then 7 weeks were in the handle portion of it, which created an absolutely perfect buy point right here on, again, enormous volume right through here. Okay, now at this particular buy point, the stock had just introduced a new product called the iPod, which is a little device that people store music on. It really revolutionized the way that we carry music with us. It got rid of the old Walkmans and the CD players, etc. You can download music directly from the internet, so truly revolutionary. And at this point, the current quarterly earnings per share were up 433%. The prior quarter was up 300%, and the last 3 quarters sales had been accelerating from up 8 to up 19 to up 36%. Now, what's interesting to note about this is the PE ratio just before it made its major move, right here, the PE ratio was 72. Okay, so that goes to show you that you don't want to pay too much attention to PE ratios. Pay more attention to the fundamentals of the company and how aggressively they're growing their sales. And so that buy point resulted in a very powerful move to the upside with this stock, which then pulled us into another cup with handle formation right through here, where you had another perfect little buy point coming right out of your handle here. And I'll show you where that is. It was right through here. Okay, and again, that handle buy point was coming right through with very good volume right through here on the buy side, which again resulted in another powerful move to the upside. And Apple has continued over the years to just do nothing more than increase in price. As a matter of fact, as I'm making this video, Apple is up around $257 a share. And so we closed out at $67 a share back here in 2006. So what a powerful move. Apple Computer, a great example of how you can catch a company right when it's breaking out with new technology. Well, I'm sure you found those examples valuable. It certainly shows you exactly what some of the best performing stocks we've seen over the last 20 years look like fundamentally and technically just before they made their major moves. Now, in the upcoming chapters, we are going to teach you step by step how to become a great investor. We're going to go over these examples in much greater detail and teach you what you should look for the fundamentals of a stock just before they make their major move, as well as how to identify that exact buy point that you have a high probability, low risk trade. In other words, how do we make a bunch of money but not take a lot of risk doing it? So in the upcoming chapters, I hope that you learn a lot, and I know it'll make you a great investor. We look forward to teaching you.